Welcome to Investero when it comes to making money through investing. The best strategy isn't about chasing hype or quick wins, but about choosing good investments that provide long-term growth, steady income, and financial security. A good investment is one that aligns with your goals, fits your risk tolerance, and has the potential to grow your wealth over time. Let's explore the types of investments that are considered smart choices for building wealth. One of the most popular and proven investments is the stock market. Stocks represent ownership in a company, and when that company grows, so does the value of your investment. Over the last century, stocks have provided some of the highest returns compared to other investments. Beginners often do well by starting with index funds or exchange-traded funds, also known as ETFs. These funds hold many different stocks in one basket, which reduces risk while still giving you exposure to growth. An S&P 500 index fund, for example, invests in 500 of the largest companies in the United States. Historically, this type of investment has returned about 8 to 10% annually over the long term, making it one of the best ways to grow your money. Dividend stocks are another great investment. These are shares of companies that not only increase in value, but also pay you a portion of their profits in the form of dividends. Companies like Coca-Cola, Johnson & Johnson, or Procter & Gamble have a long history of paying steady dividends. Over time, reinvesting those dividends back into more shares allows your portfolio to grow even faster. Dividend stocks are considered a good choice because they provide both income and growth, making them ideal for long-term wealth building. Real estate is also one of the best investments for making money. Whether it's buying rental properties or investing in real estate investment trusts, also known as REITs, real estate provides cash flow and the potential for appreciation. Rental properties can give you monthly income from tenants, while also growing in value over time. REITs, on the other hand, allow you to invest in real estate without owning property directly. They trade on the stock market, just like stocks, and often pay attractive dividends. Real estate is considered a solid investment because it's tangible. It has historically appreciated in value, and it provides diversification from stocks. Bonds are another type of investment, and while they don't grow as fast as stocks, they provide stability and safety. When you buy a bond, you're lending money to a government or corporation in exchange for regular interest payments. Bonds are a good investment if your goal is to preserve your wealth and earn predictable returns. They're especially useful for balancing out the higher risks of stocks in a diversified portfolio. Another option that many investors overlook is investing in yourself. Building skills, starting a business, or creating a side hustle can be one of the most profitable investments you ever make. Unlike stocks or real estate, investing in your own knowledge or business ventures can give you exponential returns because you increase in your earning potential for life. Some of the world's wealthiest people started by investing in themselves before putting money into traditional assets. For beginners, mutual funds and ETFs remain some of the easiest and safest good investments to start with. They allow you to invest with as little as a few dollars, while giving you access to hundreds of companies at once. This makes it easier to diversify without needing a large amount of money. Cryptocurrency is another type of investment that has gained attention in recent years. While it's riskier and more volatile than traditional investments, many people see Bitcoin and Ethereum as long-term stores of value. If you choose to invest in crypto, it's wise to only allocate a small portion of your portfolio, as it can swing dramatically in price. The key with crypto is research, security, and patience. No matter which type of investment you choose, the most important principle is consistency. Many people fail at investing not because they picked bad investments, but because they quit too soon, panicked when the market dropped, or didn't invest regularly. The real wealth-building strategy is to invest consistently, stay disciplined, and allow time and compounding to do their work. Dollar-cost averaging is one of the best techniques for beginners. This means investing a fixed amount of money regularly, regardless of whether the market is up or down. Over time, this approach reduces risk and smooths out the impact of market volatility. For example, if you invest $500 every month into an index fund, some months you'll buy when prices are high, and some months when prices are low. In the long run, this averages out and helps you accumulate wealth steadily. Another good investment approach is diversification. Don't put all your money into one stock, one property, or one type of asset. A strong portfolio should include a mix of stocks, bonds, real estate, and possibly other assets like gold or crypto. This way, if one area of the market struggles, your other investments can balance it out. Diversification is one of the smartest ways to protect and grow wealth over time. Lastly, patience is what separates successful investors from those who fail. Even the best investments go through ups and downs. The stock market, for example, has had crashes, recessions, and periods of slow growth. But over time, it has always recovered and grown. Those who hold on during tough times are the ones who reap the biggest rewards. The truth is, there's no single perfect investment. The best investment is one that matches your goals, fits your risk tolerance, and is held for the long term. Stocks, real estate, bonds, and even businesses can all be great paths to wealth if used correctly. The key is to start early, stay consistent, and never stop learning. Good investments don't just make money, they build financial freedom, create passive income, and give you security for the future. If you start today and stay committed, your investments can grow into millions over time. Subscribe to Investero.